SoftBank Group, the Japanese tech giant, has long been a symbol of ambition and innovation in the global technology sector. With its headquarters towering over Tokyo's skyline, SoftBank is a name that resonates far beyond Japan's borders, shaping the future of tech investment worldwide. Led by the charismatic and visionary Masayoshi Son, SoftBank is famous for its bold, high-stakes investments, often venturing where few others dare. Son's reputation as a risk-taker has made headlines for years, and his decisions have the power to move markets and influence the direction of entire industries. But on November 25, 2025, the world watched in disbelief as SoftBank's stock plunged nearly 10% in a single day, a dramatic signal of investor anxiety and a moment that sent shockwaves through the financial community. This wasn't a random dip or a minor correction. The sudden drop reflected deep concerns about the company's latest moves and the risks it was taking on. Over the previous 2 weeks, SoftBank's shares had already fallen a staggering 32% after the company announced its latest, most audacious investment. The market's reaction was swift and unforgiving, as investors scrambled to reassess their confidence in the company's strategy. The stock hit a 2-month low, erasing nearly half its value from a record high just weeks earlier. For many, it was a sobering reminder of how quickly fortunes can change in the high-stakes world of tech finance. For a company of SoftBank's size and influence, such a rapid and dramatic loss is more than just a financial setback. It's a shockwave that ripples through global markets, affecting investors, partners, and competitors alike. The sudden reversal highlights the extreme volatility that comes with betting on frontier technologies. In this world, fortunes can be made or lost overnight, and even the most established players are not immune to the risks. The source of this turmoil? SoftBank's massive new bet on OpenAI, the artificial intelligence powerhouse that has captured the world's imagination and its fears. This investment, while potentially transformative, has left many wondering if the rewards truly outweigh the risks. Investors are now questioning whether this is visionary leadership or reckless risk-taking. Is Masayoshi Son once again ahead of the curve, or has he finally overreached in his relentless pursuit of the next big thing? The market's message is clear. Skepticism is at an all-time high, and the world is watching to see whether SoftBank's gamble will pay off, or if it will become a cautionary tale for the ages. The panic centers on one number: $40 billion. That's the staggering sum that sent shockwaves through the financial world, dominating headlines and fueling heated debates among investors and analysts alike. It's not just a number, it's a symbol of the scale and audacity of SoftBank's latest move. That's what SoftBank has committed to OpenAI, the creator of ChatGPT, in a deal that's as bold as it is controversial. This partnership is making waves, not just in tech circles, but across global markets. This isn't a cautious entry, it's an all-in move, tying SoftBank's fate to OpenAI's success or failure. The company is betting big, putting its reputation and future on the line in a single high-stakes play. If OpenAI soars, SoftBank could reap historic rewards. The potential upside is enormous, transforming SoftBank into a dominant force in the rapidly evolving world of artificial intelligence, and possibly setting new records for tech investment returns. But if it stumbles, the losses could be catastrophic. A misstep here could erase years of gains, damage SoftBank's credibility, and send shockwaves through the entire tech sector. The deal's timing is raising eyebrows. SoftBank is moving forward even though OpenAI hasn't met key performance milestones. Many are questioning whether this is the right moment to make such a massive commitment. Some see this as reckless, driven by FOMO rather than careful analysis. The fear of missing out on the next big thing in AI may be clouding judgment, pushing SoftBank to act before all the facts are in. Investors worry SoftBank is overlooking business fundamentals in its quest to dominate AI. They fear that ambition is outpacing due diligence and that the risks may outweigh the rewards. The $40 billion question: is this a masterstroke or a dangerous gamble? Only time will tell if SoftBank's vision will pay off, or if it's a cautionary tale in the making. As SoftBank's stock slides, the market is voting with its feet. Investors are signaling their doubts, and the pressure is mounting for results. Now, Masayoshi Son must prove his conviction is more than just hype. The world is watching to see if this bold bet will redefine the future of AI, or become one of the most expensive lessons in tech history.
To fund this audacious $40 billion bet on the future, SoftBank made a move that stunned the financial world. It sold off its entire stakes in Nvidia and T-Mobile US, two of its crown jewels and most valuable holdings. These weren't just any assets. They were the kind of blue-chip investments that most investors dream of owning, with a track record of delivering consistent, reliable returns year after year. Blue-chip stocks like these are the bedrock of any stable portfolio. They offer not just financial security, but also a sense of predictability in an often volatile market. By letting them go, SoftBank was signaling a willingness to embrace uncertainty for the promise of something greater. Selling Nvidia, the backbone of AI hardware and a company at the heart of the global tech revolution, is especially telling. Nvidia's chips power everything from data centers to self-driving cars, making it a linchpin in the AI ecosystem. In essence, SoftBank traded a stake in the picks and shovels of the AI gold rush for a single risky miner, OpenAI. It's a classic case of swapping the tools everyone needs for a shot at striking it rich with one bold player. The T-Mobile sale is equally significant. T-Mobile isn't just a telecom giant. It's a source of stable, predictable cash flow, a financial anchor in turbulent times. By selling, SoftBank is giving up that stability for a shot at explosive but uncertain, AI-driven growth. Investors and analysts alike see this as a dramatic shift, swapping safety and steady income for speculation and the hope of outsized returns. It's a move that has sparked heated debate across boardrooms and trading floors. The decision signals not just total commitment to AI, but also strips away SoftBank's financial safety net. With these sales, the company is all in, with little left to cushion any missteps. It's like selling a winning, diversified portfolio to buy a single lottery ticket, one with the potential for massive rewards, but also the risk of losing it all. The market's reaction was swift and skeptical. Most observers believe the price of this ticket is far too high, and the odds of success are daunting. Now, SoftBank's future hangs in the balance, hinging on a single, high-risk bet that could either redefine the company or leave it with nothing to show for its bold gamble.
OpenAI's technology is groundbreaking, but it's not profitable, and its spending is staggering. Running advanced AI models requires massive computing power, energy, and top-tier talent. OpenAI plans to spend over $1 trillion in 5 years, an almost unimaginable sum. This money will fund infrastructure and research to pursue artificial general intelligence, but the cash burn is terrifying. SoftBank's $40 billion is just a fraction of what OpenAI needs. Investors worry about endless fundraising, dilution, and whether OpenAI can ever become self-sustaining. The path to profitability is long, expensive, and uncertain. For SoftBank, this could be just the start of a costly journey. The fear: they've bought into a project that may never pay off.
OpenAI's edge was its perceived lead in AI, justifying sky-high valuations.
But the tech world moves fast. Google just launched Gemini 3, a model that's outperforming OpenAI in key benchmarks.
Suddenly, OpenAI faces fierce competition from a tech giant with deep pockets and global reach.
Google's data, distribution, and R&D muscle make it a formidable rival.
For investors, this means OpenAI's path to dominance and profitability just got much harder. Competition will force higher spending, lower margins, and relentless innovation.
The AI race is now a marathon, not a victory lap. This new reality is fueling the sell-off in SoftBank shares. The odds of OpenAI winning it all have dropped sharply. When Michael Burry, famed for predicting the 2008 crisis, speaks, markets listen.
Burry recently accused the AI sector of circular financing, companies investing in each other, creating the illusion of growth. Money circulates within the ecosystem, inflating revenues and valuations without real outside demand.
If true, this could mean the AI boom is built on shaky ground.
For SoftBank, Burry's warning is a red flag. Is OpenAI's value real or just a bubble? The specter of another financial meltdown haunts SoftBank's massive bet.
SoftBank and OpenAI aren't just partners. They're co-architects of a $500 billion plan to build America's next-gen AI infrastructure.
This means data centers, supercomputers, and networks to power the future of AI. Masayoshi Son wants SoftBank to be the landlord of the AI economy, charging rent to anyone using this infrastructure. The potential rewards are enormous, but so are the risks.
The $40 billion OpenAI investment is just a down payment on this colossal project. Funding such a venture will require governments and global investors.
For SoftBank shareholders, this plan adds both clarity and concern. It's a bold vision, but a financial black hole.
The market is struggling to price this ambition. Is it world domination or a fantasy doomed by its own scale? On the day SoftBank's shares plunged, Japan's Nikkei index and other tech stocks actually rose. The sell-off was laser-focused on SoftBank, not the broader market. This wasn't about recession fears or a tech bubble bursting. Other companies were rallying. Investors punished SoftBank for its specific choices: selling blue-chip assets, taking on debt, and betting everything on OpenAI. The company became an island of red in a sea of green. Management can't blame external factors. The market is holding them accountable. The message: SoftBank's strategy is out of step with investor confidence. The storm is self-inflicted, and the world is watching. SoftBank now stands at a crossroads, its fate tied to OpenAI's success or failure. If OpenAI wins the AI race, SoftBank's gamble could become legendary. But if OpenAI falters, the losses could cripple SoftBank and serve as a warning to others. The lesson is clear. The AI arms race is risky, expensive, and fiercely competitive. SoftBank's saga may push others toward more cautious, diversified strategies. This is a real-time experiment in risk and reward on a global scale. Will bold vision triumph, or will caution win the day? For now, all eyes are on SoftBank, and the outcome will shape tech investing for years to come.